All right, today's episode is going to be solo, but what we are going to do is speak to the business owners out there. We're going to nerd out on some data together. We're going to cover some things that probably hit pretty close to home. And we're also at the end of the episode going to make an announcement, celebrate something special that we're very excited about. So stay tuned, Bootstrapping to Billions. All right, so today's episode is going to be for the business owners out there. We're going to work together to nerd out on some data points. I know something that, probably don't necessarily want to do on a daily basis, but definitely relevant and important because it paints this macro picture of why we experience and feel what we do every single day inside of our business. There's a big problem right now in the small business market. We want to cover it, right? And what we want to do is expose through the data that we've been able to collect through the Department of Labor and through the SBA, as well as a handful of other cited data sources. And what we've done is compiled it all into a handful of slides today that we are going to kind of work through and paint this picture of, what is this macro trend that we're dealing with in the SMB space right now? What are some of the problems that we're actually facing as business owners every single day? And hopefully the byproduct of this episode is going to make you feel like everything's probably not as bad necessarily as you feel like it is maybe on a daily basis. Like it is okay. What you're going through is probably what other folks are going through as well. And there's a reason why. What we want to get to is this reason why. And what I've been nerding out on, what I've been diving deep into for a very long period of time is that why. I've been trying to get to the heart and the purpose behind what an ownable business is, right? So maybe some of you guys know, if you don't, I published a book, Exit with Ownership, on my birthday earlier this year. It went through these 5 exits of ownership. It was a process where I'm trying to break down how you really kind of build a business, right? A concept of an exit, for most small business owners, it's this thing that's like way off in the future. And because it's so far in the future, we don't really think about it and we don't think that it matters today. But the reality is a business that can exit is a business that somebody will buy, and a business that somebody's going to buy is a business that you want to own, right? So what I've tried to do is break down this concept of exits to the thing that makes it relevant to us where we are, right? Where we are to then where we want to be, so that we can then start to take actions, right? Get a plan, take actions on it, start building equity in our business, turn our businesses from jobs into assets, all of those things. A function of being able to do this, writing the book, and also putting together the new book, which is called Ownable, which is quite literally like how to execute on these things, has been diving deep into this market, a market that I've lived in my entire life. My entire career has been in this space. And if you guys know my background, I've always led with passion and purpose around it. It's something that matters to me. And I think that the numbers matter to everybody, right? So that's what I want to cover today. And hopefully in this process, kind of scope this problem. I'm gonna go ahead and dive kind of into these slides. When I'm talking about the market, what I'm really talking about is 34.5 million on the lower side to potentially 36 million on the higher side, small and medium-sized businesses in the United States today. That is a huge number. That number is coming from the SBA. So we're talking about a very large addressable market. So this is a very large market, and it's only going to get bigger, right? So as AI starts to set in, what we're seeing is an expectation that job security is going down. A lot of folks are worried about becoming replaced by AI. We're seeing a lot of large corporate layoffs already in the news. And the byproduct, because every action, there's an equal and opposite reaction, what the expectation in the market is that business ownership is going to be on the rise. So we're actually theoretically speaking about a large market, again, we'll just say 5 million to be conservative, small businesses in the United States. And it's likely going to only get larger as we move into this age of AI, or really what I should call is age of bootstrapping, because 99.5% of those 35 million businesses are bootstrappers, right? When we're talking about bootstrappers, it is the market, right? It is also what we're about at Bootstrapping to Billions, as well as bootstrapper.ai and my firm Bootstrapper Capital. It's the place in which we live. And bootstrapping does not equal broke, right? So that's something that I want to really emphasize always, but especially in this episode. Bootstrapping does not mean broke. Bootstrapping just means that you're not going out and pulling venture capital money from large funds or pools of money to be able to scale up a business. You're instead trying to build a long term, ideally simple and profitable, but a long-term asset, a long-term business that you could build a life around, right? So a lot of these businesses are designed to just be able to support our livelihoods, which is why we also see this huge number in terms of the amount of workforce that are being employed by small businesses. 44 to 46% of the market, the workforce market in the United States, are employed by small businesses. A lot of folks think like, oh, large corporations are the big job creators, right? A lot of folks are thinking like, oh, it's the big guys that we always see in the news, that we see in these headlines all the time, the folks that have raised billions and billions and billions and billions of dollars. But the reality is a significant portion of folks put food on their table and provide for their families through small businesses. And working for small businesses, a lot of the times investing in the communities, making where you live better, and servicing people to an exceptional degree to create value, right? When we think about that, there's a true pride of ownership. And when we're thinking about this small business market, the thing about it is a lot of folks do have pride of ownership. That pride of ownership comes and carries through into the communities in which we serve, but it also shows up on the balance sheet in terms of the owner. And what we see is that greater than 40% of the assets of an owner is tied up inside of the business. So when you're thinking about a small business owner and you're thinking about their financial health and you're thinking about their net worth, the reality is a significant portion of that, greater than other portions of the population that are non-business owners, are tied up in the business. So whereas other folks are building like long-term wealth and retirement plans and all these other things through all these diversified mechanisms, most business owners are reinvesting inside of the business, which means a lot of that capital, a lot of that wealth gets tied up in the equity of the business over time. Now, unfortunately, even though this market is so large and it's so impactful, and it really does amazing things for communities, it does amazing things for creating jobs, right? It services customers and happy paying customers. Even though there's all of these really amazing things about the market, the reality is 50% of businesses will fail within the first 5 years of ownership. And that's a pretty jarring stat. The stat kind of fluctuates above and below. It ebbs and flows above and below 50% on any given year. I've been paying attention to these numbers for close to a decade now. I used to run a economic development organization in my hometown, in my state, which I bootstrapped myself after having built businesses and exited businesses and trying to reinvest into entrepreneurs for most of my career since 2012. So I've been paying attention to this market for a very, very, very long time. And this number tends to ebb and flow around it. And to me, it's super sad, right? Because that means 50% of these folks that have 40% of their net worth tied up are failing. Even more jarring is that net worth, the amount of net worth that's tied up in the equity of the business, only increases over the term or longevity of ownership of that business, meaning like somebody who's just getting started is not going to have 40% of their net worth, but somebody who's been in the business for 5 years or 10 years may have even greater than 40% tied up in that business as it's getting started, as the cash flow starting to kick in, and they haven't yet to diversify their portfolio into other assets or holdings like real estate, etc. And they're really concentrated and they're focused, right? So 2/3 of businesses are not going to survive. Only 1 in 3 will survive over that 10-year period. So 50% are going to fail in the first 5 years. Hopefully you fail fast, right? Hopefully you fail fast. If you don't fail fast, then you're 10 years in and only 1/3, 33% are going to make it and survive, right? We talk about the percentage of folks that make it and survive, it's not about surviving, it's about thriving. And for a lot of business owners, thriving means being able to pull that equity that they've been building up inside of their business out of the business, right? And that typically takes place through a liquidity event like an exit, right? So for a lot of business owners, even though the exit may be 20 years into the future, and it's not a startup where we're trying to plan for an exit in like 3 to 5 years, we're building a business that intentionally over time we will want to be able to exit, even if that exit is an operational exit, where we are no longer actively running or working inside of the business and we have somebody else running it and we're still pulling money out of it in the form of cash flow, disbursements. Sometimes there's other ways that we could do it as well, right? We want to be able to capture and move that equity we've built out. However, unfortunately, less than 7% of business owners will ever exit, right? So the numbers are not great. The numbers are not good. To me, the numbers are pretty bad. And it's a pretty huge problem because the market is massive. Again, we're talking about 35 million businesses. We're talking about a very significant portion of the market in terms of the workforce, right? We're talking about a lot of wealth that is tied up in this market. When you start to, law of large numbers, play out that many business owners times that much money that's tied up. And then we start to talk about these failure rates, it's kind of jarring. And you have to ask yourself why, especially if you care, right? Like me, my purpose and my focus and what I'm passionate about is trying to identify how to truly build and orchestrate and manufacture ownable businesses. And I'm doing it selfishly because I'm building my holding company, Simple Holdings, which I've been building since 2012. And a function of being able to own a lot of businesses, right? A holding company is essentially a business that owns businesses. A function of being able to or needing to own many businesses, especially small businesses, where you don't have the full mechanisms as like a large corporate holding company like Berkshire Hathaway per se. It's harder to do it at my level. You truly need operational excellence, right? You need to be able to manage risk appropriately. You need operational excellence, and you need things to flow simply and profitably, right? So I've been obsessing over this concept of building an ownable business essentially my entire professional career, most of my adult life. And I've had the luxury of also, time to be able to obsess over it. So I care. And one of the ways in which you need to be able to pull things out is like why. You got to get to the why. So these are a lot of problems. We could definitely agree these are, not great stats. And we got to kind of ask ourselves, well, why is this the case? So we get to the data. And what we did was we pulled out data from CB Insights, we pulled out data from SBA, we pulled out data from a couple of other government organizations and reported data sources. And this is ultimately the top 5 reasons why businesses are failing. The primary reason is cash flow and cash flow management issues. Cash flow, cash flow is king when it comes to running a business. A lot of folks are not running profit-led businesses. They're not in a situation where they understand how to set up a profit waterfall, how they can understand how to manage cash flow flowing through their business over time. And unfortunately, folks may, ultimately find themselves out of business, not necessarily because the business is bad, but just because the cash isn't there to keep it alive, right? When we talk about the cash not being there, there's oftentimes reasons for that. And what I'm seeing when I'm looking at these top 5 reasons, a lot of these reasons kind of flow up into cash flow management or lack of cash flow, realistically. And there are other contributing factors because, likely it's a lack of action towards these things or a lack of leverage to be able to take action into these things. And ultimately, it results in the business just being insolvent. Lack of market demand, this is a high failure rate. And I feel like, oftentimes it's because, folks just try to pursue passion and they try to pursue purpose without proving a market first, right? Or identifying a large problem. Like we know that this is a big problem, right? This is a very large market. And, at the end of the day, the vast majority of the market is bootstrappers. Our brand is bootstrappers, Bootstrapper Capital, Bootstrapper AI, Bootstrapper Community, right? It's who we focus the ICPs in the brand. We know that it's a significant impact in terms of value creation for the market. We know that the folks that we're dealing with have a reason to care because the vast majority of their wealth is being tied up in these businesses. And we know that the failure rate is super high. So there's a real problem to solve. And it's a large problem to solve. And that's why bootstrapping to billions, it's like, how do we build and track $1 billion of bootstrapped equity on platform bootstrapper.ai, which is the problem that we're trying to solve, right? We're trying to solve this for all of us collectively. And we're trying to help everybody build equity, unlock capital, and then go on and exit with ownership through our software and through the structures that we've been able to create as the business. I find that a lot of folks oftentimes will just go into business. They'll have an idea, they're sold on their idea, but they haven't sold their idea to anybody else. And that's why in our kind of like accelerator, bootstrapped accelerator programs, kind of like the Y Combinator for bootstrappers. We oftentimes exit one, we'll run little cohorts, micro boot camps to help folks just get started because everything does start somewhere. Exit one, exit your day job, make your business your job. We'll run these boot camps where there'll be like little sessions, and a big portion of that is trying to address, this reason for failure number two, lack of market demand. Because you can teach, train, equip folks before they get started, before they take on unnecessary risks to prove market validation. And we apply this thing called the SME framework, right? So typically SME is subject matter expert, and we flipped it. We want to make you the subject matter expert in the thing that you're building the business with. But the way we do it is we have you sell it, then make it, then exit it. And the way we want folks to get into exit one businesses is sell it, make it, exit it. And you're selling it first. Selling it first is proving that there's demand for the thing in which you're going to then invest time, effort, energy, and capital to make, right? Because things are, resources are finite. And you, at the end of the day, as an entrepreneur, you are your own first investor when you're bootstrapping a business. You're really a capital allocator, right? And you got to think like one. So you got to make sure that you're allocating your finite resources the best that you possibly can. So we tell folks to sell it, make it, exit it. That's hopefully one way to defend against number two. But lack of market demand means that people aren't buying your stuff. And if people aren't buying your stuff and you've built a business, you're likely going to have cash flow issues, especially if you have to do things like pay rent, make payroll, pay yourself, have inventory, all of these expenses that come with running the business. If the demand doesn't meet it, you're going to end up with cash flow issues and you will end up out of business, right? Oftentimes folks will substitute or subsidize is probably the better word, lack of market demand with capital, with trying to raise capital in the form of debt or equity. And for small businesses, it's oftentimes debt. I think it's something like 70%, 70 something percent of small businesses will end up taking on debt inside of their business. And there's a reason for that too, right? Small businesses, by their nature, the equity inside of a small business isn't necessarily super valuable to an investor because it's not the venture game, right? When you're buying equity inside of a small business, that small business is going to grow slowly over a very extended period of time. And there's not going to be this exponential growth to it. So the ability to receive like outsized returns from an equity investment aren't really realistic in the SMB space, right? So SMB is primarily a debt market and it's debt fueled capital. And a lot of people unfortunately take on really bad debt because there is a lot of predatory capital out there. One of the things that we're very much so trying to solve in our bootstrapper.ai platform, where we're building a better private capital marketplace for business owners building businesses, specifically bootstrapped SMBs. We're trying to create a better private market so that folks don't just get taken advantage of, because that's what we see a lot of today. There's a lot of bad capital out there. There's a lot of very predatory capital. And when folks don't have alternative options, they'll end up taking it. That's a really great way to go out of business, right? Also, folks, unfortunately, even if they do qualify for better capital, which there's not really like a ton of great debt, to be perfectly honest, it's better to just finance your business through your customers and through profit. But a lot of folks will oftentimes take on debt to fill this other problem of lack of market demand, or another problem like poor management, right? Or the wrong team. So poor management, wrong team is a very big reason why, in my humble personal opinion, why a lot of businesses kind of, lack of a better word, suck, right? At the end of the day, because there's a lot of really great products, there's a lot of really great ideas, but there's very limited amazing execution. And there's even fewer operational excellence, folks that get to operational excellence. That's why when we're trying to build ownable businesses, we created this ownable methodology. And it's really more about standardization that can drive accountability, and standardization that can drive accountability that also helps, create standardization in terms of underwriting a business, of how it operates into a standardized way to help make a better capital market. But poor management and wrong team is a very real thing that will kill a business. And even if there is market demand for that business, meaning like there's customers that want to buy the thing, poor management or poor wrong team will lead to lack of execution to actually achieve that market demand. And that will result in cash flow problems, which then bad managers take on debt or bad capital to subsidize, and then they end up out of business. And that's like a very, 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 very rare, real thing. And more often than not, it's more inexperienced than bad. I don't necessarily like the word bad. I think inexperienced oftentimes is the right word. And it also, it's a top down thing and also a bottom up thing. So you don't have everybody reading off the same sheet of music, and you don't have the right levels of accountability or visibility into the business. Inevitably, bad things will happen. Right? The fifth, I was actually pretty surprised with as it rounding out the top five. But I also think that this data is being self-reported based off of businesses that ultimately end up failing. So who really, I think we also need to take all data points always at all times with a grain of salt. But strong competition rounds out top five. Strong competition is almost the inverse of lack of market demand. It means that there's so much market demand that a lot of people came in to compete for that market demand. And the people you're competing against are just probably slightly better management teams or better executors. Because at the end of the day, most things just come down to the execution. It's not really the idea or the product. It's really more about the process and the people executing the process. It's the execution that get you to profit, right? At the end of the day. So when we're looking at these things, what we're really trying to do is reverse engineer this failure rate, right? So in order to solve something or avoid something, you kind of need to know why it's happening in the first place. And if I'm owning a business, I kind of really want to know why other people are going out of business if they owned a business, right? Like a great place to understand before you ever start is like, what to avoid. And that's why we've obsessed over this concept of building an ownable methodology, really creating a very super simple, dead simple way for folks, specifically SMBs, to come in as bootstrappers, capital constrained, even though bootstrapping does not equal broke, to come in and build an ownable business, a business that will stay in business, right? Because when we're talking about an ownable business, what you're really trying to understand is a couple of things. One, it's pretty important to understand why businesses fail, right? So you can avoid those things. Also, a function of businesses not failing is a function of businesses that stay in business. And a function of businesses that stay in business are businesses that exit, right? Because they stay in business past you, which is probably peak place to focus, right? A business that actually exits, a business that actually transacts, that's probably the definition of the best possible business you could build and market. So if you're to try to obsess over how to build really, really successful businesses, a great place to focus, a phenomenal place to focus, a super logical, sensible, rational place to focus would be the businesses that have already sold, the exited businesses. Why? Because a business somebody wants to buy is also likely one that you will never want to sell. There's a reason for this, right? Businesses that folks buy, typically when you have people that are coming in and buying businesses, more often than not, it's starting to change a little bit now, but more often than not, folks are professional buyers, or at the very least, they care enough to care. They care enough to have a little bit of concern and really try to think it through and make sure that the deal that they're doing is a very good deal, because it's typically a very large purchase. Again, most business owners have like something like 40% or more of their own personal net worth tied up in a business. So if you're buying a business, that's a huge chunk of change. That's like a significant transaction for the lives of most people, right? So it's a big deal. It's not a small deal. It's a big deal. So the buyer is doing a big deal. It's kind of a big thing to be concerned about. So you should really try to figure out how to do it right. Doing it right is really trying to make sure that the thing you're buying is good. And the way that you make sure the thing you're buying is good is by doing this thing called due diligence, right? So due diligence is the ability for a buyer to analyze and check out a deal before they take it on as a liability, because everything in life is a liability until you convert it to an asset. And that's super true in the buy. The money's in the buy, but you're really taking on a liability until you convert it to an asset. So you're trying, the obligation is on you to determine how big of a liability this thing is so that you can then beat somebody up on terms and price, right? Or just not buy it at all, right? So all of these functions is a way to try to, back into the fact that if somebody does want to buy your business, then there's a really good chance that you own a business that you probably don't want to sell, because that means it's an asset, right? So an ownable business is an asset. What you need to do is figure out how to get to a business that somebody actually sold. And a great place to start for me, in my opinion, and in my curiosity and obsession over this concept of building an ownable business, is to go to the source. And right now, the thing that I'm thinking is the source is going to be speaking to folks that have exited. So what I want to do at this moment in time is announce a new limited series for this pod for Bootstrapping to Billions, where I want to go and speak with exited founders, exited owners. I want to speak to folks that have gone on and sold their business. And in speaking with them, I want to be able to celebrate and elevate what I believe is a super underrepresented portion of the market. Because let's stop for a second. The reality is, again, data is data. Less than 7% of business owners will ever make it to this point of an exit. And we're talking about larger, broader population that's very, very small. And the reality is of the folks that do, you will probably never know. You'll probably never hear about it. These folks will never end up on the cover, the front page of the Wall Street Journal. They're not going to be on TechCrunch. They're not going to be on your favorite blog. They're not coming on the news. Like, nobody ever even knows. So I want to be able to celebrate and elevate this super underrepresented, deserving portion of our market, of our market being fellow business owners, and have what I think will be very candid conversations with folks that have done it. So what they have done is the thing that we should aspire to do as business owners, because it, again, is like peak excellence. Again, getting to that moment in time of a final exit is statistically very, very rare. And understanding what got somebody there is a great opportunity to learn what you should do in your business. And I feel like through having super candid conversations with folks, what do they regret? Right? What did they learn? If they could do it again, if you could wave your magic wand, what would you do different? Right? All of the things that are very, probably not oftentimes asked, right? And very oftentimes broadcasted or communicated or conversed. I want to pry out of folks who have lived it, so we can take those learned experiences and apply it for you, for everybody, for all of us. And that's going to help us with Bootstrapping to Billions, as achieve the goal of this pod. The goal's in the name, which is to build $1 billion of bootstrapped equity on platform, bootstrapper.ai. Right. So the goal is to take that 7% number and drive it to 100% of us mastering all 5 exits of ownership. And I'm hoping that through these conversations, through these super candid conversations, we'll pull out some real jewels of information that will help folks at every one of the 5 exits of ownership. Because again, there are 5 exits of ownership, and the book from back on my birthday in July, Exit with Ownership, it's where I tried to break down all 5 exits of ownership, so that no matter where you are today, you could find a place to start, because everything starts somewhere. You need to know where you are so that you can get to where you want to be. And sometimes it's like eating a cake. You look at it, it's just too big to eat at once. So you got to take it one slice at a time, right? That's like the concept of each exit at a time. Exit 1, exit your day job. Exit 2, you're going to exit from doing the work, start building a team. Exit 3, you're going to exit from managing people, right? You have a team, now you got to manage everybody. You want to exit out of that, build an operating system, like an ownable business, truly ownable business through cadence of accountability, right? Exit 4, you're exiting out of the day-to-day of running that operating system, that business system. Operational exit, you're exiting with ownership. And an operational exit, exit 4, which is the first true exit. And honestly, I would rather have everybody get to an exit 4 exit, which is like you still own the business. That's kind of like a holdco. That's like operate with a holdco mentality, right? But in order to get to the point where you can operate a holdco mentality, meaning like you passively own a business, you're in the business of owning businesses, and you're receiving your profits off of the profit disbursement of that business in which you own that somebody else runs, right? So it's not your problem. It's not your job. That's when you really convert a business from a job into an asset. If done, right, you could do it sooner to a certain extent, but it's genuinely a fairly passive asset at that point. In order to do that, you need a business to then get there. You need a business to have a holdco. And then once you have one, you need more. And that's technically, how you start to build your own holdco. So I'd really realistically love for more folks to build ownable businesses that can convert them to holdco entrepreneurs. I would love to see a whole rise of holdco entrepreneurs, because I feel like it just creates accountabilities and puts parameters in place where you kind of are a forced function to build a better business. And I just believe that businesses deserve to be better. I believe that there's only more to gain from businesses being better. And I do believe that by building better businesses, we can convert this from 7% to 100%. And more importantly, we can actually get some frameworks in place where it's like not 50% fail, but get as close to 100% as possible succeed. And like, that's pretty meaningful because again, this market is massive, right? Like every time a business goes out of business, you're talking about folks getting laid off. You're talking about homes and households that go and become income insecure, right? Income insecurity is a place for being compromised and compromised behavior, right? All of these things, I think the societal benefits and lift that we'll see as a whole, because it matters, because it's huge, I think it truly genuinely matters. And I personally believe that operating with a holdco mindset is a great way to put accountabilities in place to get there. Ultimately, this puts you into this position of a truly ownable business. And I'm hoping that through these podcast conversations with exited owners, we'll get better insight from folks from the source. It's like go to the source in a sense. We'll probably start with the exited folks, and then maybe we'll even do counter interviews where we talk to the folks that actually bought those businesses. I think that would be super cool, right? As a little bit of a prelude, but who knows? Everything starts somewhere. I want to start with talking to exited founders, exited owners. I want to do so in like a limited series capacity, right? So that we can test it, make a simple bet. This is a simple bet for us. Have some really meaningful conversations. And then the outcome of it, hopefully everybody listening to the pod, you'll end up in a business you can exit, but a business you can exit is one that you'll never want to sell. And hopefully you'll end up in a truly ownable business that you'll own for the longest period of time, put as much profit in your pocket as you possibly can, and be able to trust the process, commit to the journey. Till next time.
If I could do it all again.
Struggling business? It's time to exit with ownership. Join the Exit Studio. Build equity. Unlock capital. Exit with ownership. Keep it simple.
I feel nauseous, believe me. Never had a lot of shit come easy. Had to work hard, struggle just to be me. Had to rise up just so they could see me. Did what I had to do just to feed me. And what was left over I put towards my dreaming. But the only thing in life that has meaning are the things you gotta work for, believe me. Take into your hands a plan, your own hands can land your own brand. And damn, I feel like no one takes accountability. They want the credibility, convincingly unwilling to put in the hours it takes to get some power. Don't be fucking sour, take a cold shower. Scream until you're louder, work until you're prouder. And
you gotta have that grit, that hustle to make it in this city. Never give up.